Okay, you guys ready?
I always joke I've got the wrong friends.
From a financial liquidity perspective, you guys punch way above your weight. What's the slingshot there, Kim?
Sure.
Immigration maintains to be a material risk for PPS. How is PPS adapting?
Mutuality was stolen from South Africans in the 90s. What Glue is doing is it's giving Mutuality back to South Africans.
So to start this episode, and in preparation to this episode, I was actually thinking way back when I finished my degree back at Potch. And the first time that I ever heard about this concept of taking out insurance and you're automatically also a shareholder of the company was back then. But yet I never heard of PPS, the Professional Provident Society, an elite association, a company that only works with graduate professionals. Well, today we've got two very special guests on Money and Medicine. Gentlemen, we're going to talk about leadership. We're going to talk about the concept, which is probably as old as insurance itself, mutuality. Why mutuality is such a unique concept in South Africa, yet if you look at it from a global perspective, it's actually quite well known. Probably 1 in 4, 1 in 5 insurers in the world is based on mutuality. So a warm welcome from Money and Medicine to Isak Smit, CEO of PPS, and Mr. Mzwandile Mchali, head of the whole of distribution. Welcome, gents.
Thank you.
Thank you very much.
So as a bit of an icebreaker, I think sometimes if you listen to these podcasts, you don't always know the story behind the story. Who is Isak? Who is Mzwa? And we've had the privilege to build a bit of a relationship with you, to walk a bit of a journey with you guys over the last couple of years. And I know Isak specifically, you're quite an adventurer. You've climbed some of the highest mountains in the world. You're a surfer, yet you also run a company like PPS, and you've been in executive positions in the past. Which one was hardest?
Yeah, Stefan, I always joke I've got the wrong friends, and probably a rubber arm as well, and maybe on the odd occasion, too many glasses of red wine, but they always check me into these things. But yes, I dabble. I think it's too boring to do one thing, so I run a bit, swim a bit, and so on. I like to do things with my boys. Now, what's the hardest? I think mountaineering and really rock climbing. I've got a fear for heights, but my youngest son, he loves it. So I belayed him with ropes. I just said the one rule is he never go up those rock faces without being roped in. So I had to belay in, and often when he does something, a section, he says, "Okay, Dad, your turn." So
yes.
So I got into that one. But it's still for me a struggle too, because honestly, I've got a fear for heights. Yeah.
Did you guys teach yourselves, or did you attend like some form of a course or a program, or was it just self-taught?
A mix. We did when we started doing alpine climbing. We got the instructor in Chamonix in France, same guy that we work with every year. And he taught us basic alpine skills and basic rope skills. But for the rest of it, here in South Africa, we've got City Rock. You know, a lot of the youngsters go and climb on these walls. So yeah, it's a lot of it is basically just training and be out there and doing a bit of gym work as well.
Yeah. Awesome. It's a skill. I've been to City Rock once or twice before. Back at Varsity, Stefan mentioned now about Potch. And that's where I met my wife. And she actually did a little bit of rock climbing back in Potch. And then when we moved to Joburg, City Rock opened. So she said, "Listen, Werner, come, let's go try it out." And I must say, that's quickly how you learn how difficult it is and how strong you need to be.
Yeah.
It's an exceptional skill to have.
It motivates you to go to the gym now and then and do a bit of pull-ups and so on.
Yeah. And then, Mr. Mchali, I'm going to go over to you. I said you are basically a boardroom leader by day, but I want to add there by night as well, because last night we had our FS4P conference, and I believe you guys had a workshop or a presentation in Rosebank afterwards.
Yes.
I remember we were working on a project together some time ago. You called me on like the 26th of December, 7th of December. You're on holiday. I said, "Mzwa, listen, it's holiday." And you're like, "Steph, for me, this is holiday, working." So I want to say you're a leader by day as well as by night.
Okay.
And you've been deeply involved in education through Cultivating Tomorrow's Professional program. What is that?
Firstly, thanks for the invite to your podcast, Stefan and Werner. Cultivating Tomorrow's professional program, it's an initiative by PPS to actually take the responsibility that is often left to the state and society to cultivate, groom, breed professionals. But as an entity, we decided that we can't just leave it all to society at large and the state to be able to do that. We can contribute. And how we contribute is that we try and source the people who are most likely to get lost in the system, as it's happened to a whole lot of thousands of people. We find the top 10 students across, right now our presence, we are on 12 schools. So it's a combination of disadvantaged, mostly schools. We've got 1 or 2 private schools in there. And we take that top 10, we take them through a year-long intervention. And the year-long intervention focuses on 3 primary things. STEM, with a huge focus on maths, of which Mr. CEO is one of the maths tutors there. On a Saturday, he comes and gives insights to the youngsters on the maths syllabus. And then 2, it's on experiential learning, really about really experiencing what life is about post-universities and prepare them to go to university and so that they can become more informed and better professionals. And then thirdly, it's corporate exposure, which is something that I wish I had when I was in grade 11, where different people from different professions come and speak about their career paths. Because now no one person's career is the same. And few people's careers make sense, but it's that story that's unique. And once those kids get a perspective of the different options that are out there, they're able to make informed decisions when they have to apply for university the following year.
Oh.
That is what Cultivating Tomorrow's Professionals is.
And to your point on, you grade 11, grade 10, you need to now start making a decision on what you want to be for the rest of your life. And I think both of us, both me and Werner, can testify to this. And I had a long conversation to Nick Battersby about the same thing, where he also studied engineering. And just like you're so young, you don't even know what life is really all about. And now you need to carve your way out in the professional arena. So what I like about this program is the exposure. Is that part of the mutual ethos? Is it part of the mutual ethos to say, listen, this is what we for professionals, we want to give back to professionals, and not just in the form, and we're going to talk about mutuality today because I think it's a concept that's misunderstood in the professional market, but is mutuality more than just sharing profit? It's about also giving back to communities.
Of course.
Yeah.
You just said it yourself there. So one of the biggest shifts that we've done also as a business is move beyond just mutuality for the member for profit share. It's become mutuality for the employee, become mutuality for the intermediary, and then mutuality for the community. So this initiative that we're talking about here is actually our mutuality for the community. But what's beautiful about it then is also, if you look at it in commercial sense, is that it becomes an alternative distribution channel in the sense that by cultivating, grooming, growing our own professionals, they then join PPS, of which we just asked a few of the alumni of the program, how many were PPS members? And there were about 30% of those who were still even in their 4th year of study, because the program's only been around for 5 years, are already PPS members, and they're already registered, and we didn't deliberately go out there, and all of them have the intention to become PPS members when they graduate.
That's powerful.
And that's basically guys that joined PPS out of their own while following this program.
Exactly, 100%.
Isak, you've personally led and you've been involved in leadership through various companies. I know we had a long conversation the other day, 2 weeks ago, where you told me the story where you started at Citadel. I believe you were at Absa at some stage, and then you moved over to PPS or navigated your way to PPS. Did you make mistakes? And what were those mistakes?
Yeah, before we get to the mistake parts, just very quickly, it's interesting, Stefan, I never intended really to manage people. Look, when you're young, you're sometimes a bit in a leadership position, here and there, captain of a sport team, whatever. But look, I qualified as an actuary and I loved my spreadsheets and very happy in that environment. And when I was asked to, for the first time here at the turn of the century, to start managing a small part of the business at Citadel, I actually first of all wanted to tell that, go away, man. I'm perfectly happy. And later at Absa, same story. I was running the actuarial team, and they asked me whether I would apply for a general management job and later for the CEO job of Absa Life. And I kind of tried to brush them off. Same story, PPS. I think I tried to chat myself 4 times out of this job, but eventually I really warmed up to it. And I can tell you it's a great opportunity to have impact. Now, mistakes we all, of course, make. It's just part of life. Nobody's perfect. Typically, mistakes that one sometimes make is putting the wrong person in the role. Luckily, over time, you get better with that, and you start making fewer of those mistakes. But now and then, you just realize you've made a mistake. This person shouldn't be in this role, maybe in something else. I think the people mistakes are probably the biggest ones. If I think back, maybe one particular mistake also just recently that stood out, we started a business in Australia about 9 years ago, started writing business there. And there was almost the standoff initially, the numbers didn't happen and we couldn't understand, maybe it's just the team wasn't up to the job. And their feedback the whole time was, but the system, the platform is dropping us, And eventually I went there and I said, look, man, I really want to talk to the brokers and put me in front of those who don't support us, who have lost faith in us, whatever. And I realized it was indeed, we have to do that. So maybe that was a lesson, really be there, listen to the feedback right at the front end, because that is where it all happened.
Like boots on the ground, hands dirty.
Boots on the ground, experience it. It's painful sometimes, it's painful when you see those wheels spinning and the system is slow and so on. But if you experience it in a financial advisor's office, you just get back to the office and say, hey guys, we have to change this. Yeah. So it could have been quicker a bit on that one.
Yeah, and I think it's difficult. I think especially in your role, it's because you're sitting at the head of PPS running this company. And there's a lot of organizational different aspects of the business from where you're sitting to the advisor. And I think to go back to the advisor and get a little of their insight, it's so important. But I can believe it's very difficult because you are quite far from the actual sell and an engagement.
And quite so. That is why my agreement with Zwandile, as much as possible, want to talk to the likes of you guys and get it. And often, if the trust is not there in an organization, the people try to protect the CEO or management from the bad stuff. They're not honest. And, we try to be brutally honest. Our message all the time to people, don't rub it under the carpet. Really, if something is wrong, talk about it, let us know about it. To make it a positive, then we say, at least if you just can come back with one solution, that immediately turns the problem into an opportunity. But we encourage staff, just to, surface suggestions that we can go better and now what can we do about it.
And I must compliment PPS in that space. Very few companies have that opportunity where, from an operational perspective and call it from a field perspective, the sales advisors, operational people that's actually in the field where there's synergy between operations and sales. I have to compliment PPS and trying to get it right, because very often, especially when it gets to insurance, financial services, and investments, there's a distance between what's happening on the ground and what's actually happening behind boardroom doors.
And Stefan, our environment, our products are advised. As I always say, we only have one channel at PPS. That's a face-to-face channel. It's the nature of the advice, So we are as strong as our new business from our advisors. So it's so important, really, to know what's going on in the distribution side and how can we make it better.
Yeah. And to that point, and that's actually what I want to ask Zwandile. We've seen under your leadership as well, over the last 5 years, PPS has doubled its assets and premiums. What has been the hardest part of transforming that team?
Sure. Yeah, it's a very difficult question because of the nature of any transformational program. It's multifaceted. So there is not this one thing that you need to sort out. But I'll probably just talk about the top 3, if you allow me, in terms of the most difficult part. The first and important, I'll speak about probably the first part, the tied agency, is that you have to create, for a tied agency to be successful, you have to create this high performance culture of success. So you've got to ensure people believe in themselves, that they can do what's not humanly possible. And it's difficult if the environment over 1 or 2 prior years before that had started to doubt themselves, had lost confidence in their ability to hit their numbers. I mean, it had gone through quite a number of years not hitting business plan. So to rebuild that was one of the hardest tasks that came out. And then second, most importantly, I mean, it's said as a cliche, but it's always right. It's just to make sure that the team around you is the right one. And to be able to determine that also is, it's not walking in and being bullish about you being right, you having all the answers, but really listening intently, understanding all the environment that you have, people's strengths, and making sure that they are in the right role that they are supposed to, and where possible, you augment them with the external talent that you bring into the business. So that was the second one that you have. And then thirdly, it was really then to just make sure you create this culture of continuous learning and development where people want to be at the highest level of the academia in the profession that they've chosen. For us, for example, we want to make sure that at a minimum, everyone must have an NQF 6. And we did lots of strides over that 5-year period, that by the end of that 5-year period, 100% of the people were sitting at NQF 5, which was not the case prior to that. And then numerous of them had moved on to NQF 7 and 8. Yeah. So those are 3 things.
And I can imagine how difficult that must have been because you've got guys being advisors that's been probably with PPS for a number of years, but didn't necessarily meet that academic qualification criteria. But they are exceptional advisors. They give good advice. And I think often, and we've seen it, I think working with professionals like with PPS, which they target market, sometimes if you don't have the same qualification criteria, it might maybe affect your confidence because you feel like, listen, I maybe just have an undergrad or I just have a diploma. I'm speaking to someone that's an advocate, as an example, or a medical doctor. And it doesn't make you less, what's the right word for it? I almost want to say it doesn't make you less powerful or makes you weaker than that person. But sometimes you might feel like, listen, I didn't have this profession. Why are they going to listen to me?
I want to flip it on the other side. I think, did you guys find it challenging? I'm just thinking how South Africa as a democracy has changed over the last 20, 30 years, where predominantly in the past, a lot of the clients that we deal with currently comes as first generation professionals, where they don't come from a professional background, where it's like my dad and my grandfather and my great grandfather's broker has been our broker and our financial advisor over the years. You've got this phenomenon where for the first time they need to make these important decisions. How did you guys find it difficult to speak to that audience? And how did you navigate through that complexity?
So definitely. So what helped was that it helped also to have within your advisor force a very diverse one, because being first generation doesn't necessarily mean that they'll only just want to speak to people who are like them, but it means that they'll have a very clear articulation of who's the kind of advisor they want for themselves.
Yeah.
So if they're able to provide that by having a diverse advisor force, you're already a step ahead. You are able to provide, because we always keep the choice with the member, who they want to deal with. We don't impose it. If a member is very unhappy with an advisor that they have, we give them options to say, these are your options, and we move them to where they're going to be comfortable and they'll feel that they'll be taken care of in terms of their dreams and aspirations.
100%. And I also think it's a generational thing where people don't necessarily want to buy the CD. Yeah. They want to buy that one song. So they only want the one song.
Exactly.
So the flexibility around product offering and product solutions, as well as from a, call it service rendering perspective, who I want to do that service through, that flexibility is paramount. But let's just maybe stop at mutuality. And I'm going to tell you why. So when I remember when I, for the first time, as I mentioned earlier, when I heard about PPS and this concept where you are a shareholder as well as a policyholder and you actually share in the profits of the company, I couldn't understand why people are not with PPS as a professional. If you've got a 4-year degree, why are you not with PPS? And the thing was, I never heard about PPS. I grew up, you heard about all the competitors and the banks and the big companies. And for the first time, there's a gentleman walking in and he's positioning PPS, the Professional Provident Society, and Mutuality. And they spoke about Mutuality. And when I started as an advisor and positioning PPS to certain clients, and we start talking about profit share and profit share accounts, and PPS is allocated 20, 30 billion over the last 10 years, very few actually know what that means. What is mutuality? In layman terms, what does mutuality mean from a South African perspective?
Yeah, look, we often say it's a stokvel on steroids. But yes, Stefan, we also ask ourselves sometimes, why is it just it's almost like the model how it should be. And in fact, most insurance businesses in the 17th century, long ago when they started as mutuals. Very few started as stock companies. It was, the situation was people had a need for something for protection. There's the risk out there, and then they pooled together. And that is often how mutuals started. So a couple of things there. First of all mutuals have a very strong purpose. It originated, as I say, from people coming together and say, we've got a need and we need to stand together to help ourselves. In our case, PPS, in 1941, it was a couple of professionals who were quite worried what would happen to their families if their ability to earn an income falls away. Interesting time to start a business, probably during a world war, but maybe that is the time when one consider these things. So they've got purpose, strong purpose. Now these days, all businesses will say we've got purpose, and probably all businesses should have a strong purpose. But for mutuals, it really comes naturally. So the focus on the members. We don't have shareholders as a stakeholder. So there's no shareholder that wants rightfully a return on the money that he or she invested, because that stakeholder doesn't exist. So we are in a position to do something else with the profits that get generated. Now, it doesn't always have to be profit share returning to members. You can also use that money in other ways. For example, you can maybe have a better product proposition or lower premiums, or just invest it in the community, or just build up a strong estate that sits on the balance sheet, and maybe you wait one day, an opportunity comes along and you use it for something. I would say PPS is almost an extreme form of mutuality, where we really return our profits to our members, almost all of it. There's a bit that we do the CSI activities that Mzwandile already touched on. So it's not that. And then we also, as Mzwandile also said, it's not only the numbers, the profit share and so on. There's much more that we can do for our members also. Professionals often want to develop themselves. They want to grow. Wellness, of course, us being in the life insurance space, health, wellness is very important. If we get that one right, it influences our claims experience as well. But it makes our members happier. So we can also channel some of the funds in that direction. But most obviously, we return in the form of profit share to our members' notional profit share accounts.
Right. Isak, when we look at PPS and the requirement of PPS, you've got a very specific academic qualification criteria. Why is that so important to PPS?
Yes, the definition or what makes you eligible have changed over the years. When PPS started, it was started by dentists, only the dental profession. Quite interesting that they didn't call it the Dental Provident Society. They called it the Professional Provident Society, although the model that they based the society on was along very similar lines as a society in the UK that even today, in 2025, is still the Dental Provident Society in the UK. But they called it the professional, so probably they had the intent of very quickly inviting other professions also to come in, medical doctors, engineers, legal professions, etc. I think in the early years of PPS, it was very much if you were a member of a particular professional association. But later, it turned more to academic qualifications. And these days, it's basically more or less a postgraduate degree, honors and masters and so on. Now, it is just important to have quite a definite line. If you make it very vague, then it creates all kinds of problems. So, to be honest, we don't always like that very firm academic qualification because, what is a professional? A lot of people without necessarily certain academic qualifications are also very, very professional in the job that they do. But we had to draw a line somewhere, and that is just how we apply it these days. We do believe focused businesses are very good businesses. So that focus in terms of the segment that we serve makes us quite strong. We understand the needs of professionals. We develop our products very bespoke. Yes, that makes us quite a strong business.
So, Isak, I want to talk a little bit about eligibility, because one of the things in preparation to this podcast that I picked up is, and I might be wrong, but as far as I know, there's three or four mutuals left in South Africa. We had more mutuals. Unfortunately, they had to open up to the market, or fortunately, depending on how you look at this. I know from a risk perspective, your graduate professional, if you talk to actuaries, your graduate professional tends to be on a lower risk pot, which makes your claims lower, which potentially can be an argument, or it can be a case as to why PPS is still alive today. But if you look at it from a global perspective, I'm going to read stats. In 2022, there was over 110 mutual life insurance companies. I'm only talking life insurance. If you include the rest of the insurance sphere, it's over 1,000, representing close to a fifth of the entire market. If you look at the UK, 138 mutual insurers, and the source here is ICMF, of which I know PPS is also very heavily involved, etc. Why is that? Why in from a South African perspective, our financial services is considered of the best in the world? Why is Mutuality such a weird phenomenon in the South African market?
Yes, Stefan, it's indeed strange. Africa is the continent of Ubuntu. We understand that. We understand it should be more. I think maybe a few reasons. First of all, to start a mutual, as I've said earlier, is often a community coming together to serve a particular purpose. And that sometimes is a bit of a challenge. And remember, our industry is very heavily regulated. Barriers of entry is actually quite high. It should be very regulated. You work with other people's money and so on. So it's often a bit difficult for a community to start a insurance business. So there might be a bit of a regulatory reason as well. It's not easy. I think the second one is just that it takes quite a bit of capital. These days, businesses like ours, it's very heavily IT related and so on. So again, barrier of entry, it's quite tough for a community to come together. And, just by definition, a stock company is not going to start a mutual. You need to earn a profit. So I would say, it is tough to start these businesses. Quite often, it's if people see a market opportunity, an easier route to the market is to get a capital together from stockholders, raise capital and go for it. Because if you want to start a mutual, you need your capital from those members, and that is quite tough.
How would you say do we compare? And when I say we, South African market, PPS, how do we compare against on a global scale against some of these mutual companies that's been around for many, many years? I've heard stories, some of them are hundreds and hundreds of years old. Yeah. Again, started with purpose, as you mentioned. We see mutuals in the farming communities, professionals, medical space. How does PPS compare against these giants?
Often humbling when you mentioned we're part of ICMF. We often see other mutuals around the world. And then we think we're quite old now, 80 years plus. In the South African context, that's already something probably to brag about. But in a global context, many of these organizations have been around for 100, 200 years. Many of them very big. So especially in the first world, they often millions of members, big balance sheets. So quite sizable. But interesting, Stefan, when we compare in terms of what we do, we are perceived as quite innovative in South Africa. Other mutuals listen to us. They are very curious. And then we realize maybe it's a characteristic of the life industry in South Africa as well, quite innovative. And there's a lot that we can learn from others, but there's a lot that they want to learn from us as well. So in that regard, we don't have to stand back.
Awesome.
So in preparation for this as well, PPS recently launched their financials. We've worked through the financials, looked at some of the line items, and we've seen that it's evident like companies like Discovery and Sanlam, they've got massive marketing budgets if we looked at their financials as well. In some instances, we've seen that the marketing budget is almost 10 times that of PPS. And if we look at a member perspective, PPS from a member perspective being much smaller than them. If we look at Sanlam, for instance, globally, they're sitting close to 70 million people, and then Discovery is plus minus 6 million. From a financial liquidity perspective, you guys punch way above your weight. What's the slingshot there?
Very, very good question, which I would answer by saying that's one of the reasons we're here, right? We make sure that we build a long, sustainable relationship with our partners. Let's say partners, key strategic partners, like our distribution partners, in the sense that we're always going to be top of mind. And they are the ones that are actually out there taking us out into the market. So if that is solid, your relationship with your intermediaries, the tied or the external, it's solid, that means you cover distribution, because that's how the war is won. Is the one with the stronger distribution will be actually the one that will get the most market share. So that's very important, and that then allows us to do targeted marketing so that we don't have to always just blast to 60 million people when we know that in a country plus minus 800,000 people qualify to be PPS. We can be very, very, very targeted out of that one. And then thirdly, which is something that we've been doing in the last 18 months, is really starting to box smart with our data, which allows us to really hyper-personalize our solution set that you spoke about, and also hyper-personalize our offering that we offer our advisor practices. Sure.
And I agree with what Bernard is saying. If you look at, and some of the stats is a little bit outdated, you don't get the latest stuff, but if you look at members, I think PPS is sitting at about 135,000, and was according to the financials. Bernard mentioned the 70 million was Sanlam. That's now from a global perspective. Mm-hmm. In the South African market, it's roughly, according to the stats, about 1 to 2 million. And then the Discovery, again, also 5 to 6 million. Yet, if you look at average claims paid per day, average claims paid over that same year, benefits that you actually get from an insurer, it's more or less the same. So again, obviously you can debate that we're working with a with a professional type of client, but again, punching way above your weight from that perspective. With that said, the likes of a Discovery, a Sanlam, they have reward programs which tend to speak to the needs of the younger generation quite often. To get those free smoothies, to get those movie nights, to get those plane tickets at a cheaper rate. We were joking, we were late the other day for a flight to Cape Town, and the priority lane with Discovery there was no one, and then the other lane was standing literally about 50 to 100 meters back at the airport. Anyway, I was very tempted to just borrow a Discovery bank card and show it to get in. But is this PPS's game? Is PPS looking to potentially pivot into the vitalities, the realities, the reward programs, the lifestyle programs? Is it something on the cards?
Yeah, Stefan, I can remember when I joined PPS, one of the things my chair told me at the time is we're grappling a bit with this early gratification thing, especially amongst the youngsters. And we should think about it. That was 9 years ago, and still grappling with it. However, as we sit here, I'm very, very excited. We're busy with a very, very exciting project that we want to bring to market next year, aiming for 2026. That's going to touch on this space. It's going to address things like a bit of earlier access. And also there's going to be a rewards element in it and so on. We don't really want to go and compete with the well-established rewards programs like Vitality. In fact, Discovery has done a pretty good job there, and you don't go and compete where your competitor is strong. But although our program will have rewards elements, it's a bit of a different angle. It is a mutual angle. We're going to use the power of the mutual society also. There's nice things that we can build into the program. We're partnering with Accenture, the global consultancy. It's a very big project. In fact, it's one of the biggest bets that PPS has made, arguably the biggest one in our history. I'm surprised that the board they trust us as a management team to don't get this one wrong, but very exciting. So almost all that I can say at this stage is watch this space. We're busy with a very, very interesting development. Ultimate objective is to help members to live their lives. That's our purpose, to have life plans in place. And as you guys know better than us, a big part of your life map is the financial aspect. You have to obviously cover risks, make sure that you hedge against catastrophes, and being able to do those nice things that you want to do. So all of that will also be built in, and hopefully we will be able to help you guys as well and make your jobs easier. But it's very exciting projects, so hang in there. This one is coming.
I hope I don't jump the gun here, but talk about projects. You guys launched Glue, and talk about big projects. Glue, I believe, was a massive project and breakthrough in the market. What is Glue? Mzwa?
I was going to use one of Isaac's favorite quotes. He always says, Mutuality was stolen from South Africans in the 90s. What Glue is doing is it's giving Mutuality back to South Africans. So Glue is extending this beautiful mutual concept that has only been enjoyed by the 1% of our nation. We're extending it to the rest of the population out there. So they will also be able to experience what Mutuality is and the benefits of it and the realization of a profit share account when they retire.
I want to ask a question, especially for listeners that read in media and look at the financials and see PPS launched Glue. We earlier spoke about the qualification criteria of PPS focusing on graduate professionals and now Glue being open to the general market. How is Glue going to affect that business model of PPS from a risk perspective?
Yeah, very good question, Werner. So, and we often get asked this question. People say, are you now losing your focus on a particular market segment? I said earlier, I think focus businesses are strong businesses. But how we go about it, very, very thick Chinese walls between the two brands. Actually, there's very little that Glue need from the PPS side. Obvious things like, it gets to actuarial committees and governance and cyber security and those things. Obviously, we leverage it across the brands. But it's different management team, different brand, obviously, different platform, different products. So very, very different office. We kicked them out the other day now that they are up and running and the brand is out there. Etc. So Glue actually is a separate business. It will have its own profit share pool as well. That will be different from the PPS one. So we argue that, and if we get this right, and I'm sure we are going to get this right, it will allow us on the PPS side to now be even more bespoke. So that challenge in the past at the peripheral where people say, man, can you not look at your eligibility and, include me as well on the PPS side? Well, the Glue option is now available. So we don't want to lose our relentless focus on the professional market segment on the PPS side. But as Mzwandile said, there is now a mutual option available to all other South Africans as well.
Yeah, and we especially are very excited about it because as advisors that assist clients with a PPS product, we've often had it where, I remember back in the day, it's changed now, but back in the day, a chiropractor, as an example, wasn't part of PPS's eligibility. And it was always a difficult question to answer when they say, but aren't we good enough? Why don't we qualify for PPS? And I think a lot of people feel like this out there, where they also want to be part of this mutuality and they also want to be part of this profit share model. We spoke a little bit about member growth. That's why you mentioned that there's about 800,000 South Africans that do qualify for PPS, of which 135 is currently in PPS members. I see in the financials that immigration maintains to be a material risk for PPS. How is PPS adapting to the risk of immigration for young and old professionals to remain relevant?
Should I take that one? Yes. Immigration is a risk in our market segment. A professional, well-qualified professional can go and practice wherever in the world. Doesn't have to be in South Africa. But a couple of things here. First of all, our statistics that we see, there's not that big a leakage out of PPS. And one of the reasons is, of course, if that professional immigrates, often they don't immigrate financially totally as well. They can stay a PPS member. And if they have a claim from wherever they are in the world, we'll if it's a valid claim, we'll honor it. So many of them actually stay PPS members, even though they go elsewhere. And some of them also come back. We see there's also immigration back to South Africa as well. Sometimes it's a phase, but at a certain life stage, people want to come back. But also, this is the reason why we spoke about big bets earlier, why we also decided to also start that business in Australia and about to start one in New Zealand. So makes us a little bit less dependent on our pool only in South Africa. So there's profit for our members that will eventually come from these first world countries because we support them with services and so on. We charge a fee for that. So that is so. And then I think our conversation earlier also about the transformation in the market. There's big portions of the population that see their future in South Africa. They are not. They might, as I've said earlier, they might go overseas for a while, but they actually want to come back. Their future is here. So yes, it is a risk, but the risk is sometimes blown up a bit higher than what I believe it really is. Isn't it great to be South African, and this is a lovely country? And we hear those noises overseas when we travel. I think there's especially two life phases where people actually really consider. The one is when they start raising kids. South Africa, lovely country to raise children, and also people reaching more mature phases in their career. South Africa is not that expensive place to eventually retire and so on. So the flow is not only one way. And by the way, maybe just a last point, New Zealand, where we're now about to start a business, they experience the same thing. Youngsters, New Zealand is very far away from everything. Yeah. You feel it when you're there. And their youngsters, many of them want to go overseas. And yes, many stay eventually and don't come back, but a lot come back eventually. And I think the same trend is here visible as well.
I can imagine you guys seeing this on a much bigger scale than what we see. But we experience it in our own clients. We've got a number of clients that over the years decided they want to go work in another country for whatever the reasons might be. And we've seen a lot of them coming back. We live in an absolutely amazing country, and I think it comes back to your roots. I personally know of people that left South Africa, went to the UK, started a business there. Their kids were born there. And then what happened is, over time, as the kids got older, over Christmas, they used to come back to South Africa, spend time with family here. And once the kids became bigger, they said, but listen, they love the weather here. They love the South African spirit. And they ended up packing up in the UK, coming back to South Africa, lock, stock, and barrel. And we've seen it now. I've actually experienced it about 2 weeks ago. Maybe 3 weeks ago, client of mine, young engineer, went to Germany to work there with the idea to earn more, to have more opportunities. But the cost of living is so expensive, like you just said now. He said to me, you're earning a little bit more, but at the end of the day, you don't create more wealth because you spend more as well. And they ended up coming back to South Africa.
I think on that point, a lot of our friends, colleagues have moved north, UK, Europe, and we have seen a lot of them east and west, US, as well as Australia and New Zealand. Strategically, why Australia and New Zealand? And do you see PPS moving, let's call it more north, into the UK, potentially Ireland? We've seen a lot of, especially on medical doctors, move into Ireland and Canada and those sort of countries.
Yeah, Stefan, why Australia? I think that one, my predecessor, Mike Jackson, the original idea actually was planted during the Football World Cup 2010. Some Aussies that were here that Mike knew well. They were also expats. I think Mike Jackson was a mentor to them. They discussed the idea, and eventually in 2013 they started working on the whole business plan, took it to the board, was approved. 2016 we started writing business there. But when I asked this question to Mike Jackson, he said it was quite a no-brainer. It is one of the countries, as you've just said, where many South Africans do go to. It's English-speaking. It's well-regulated. It's more or less a country that's not too difficult for us South Africans to understand, to set up a business. It's first world, strong currency. It ticks all those aspects. Good growth country. They call them the lucky country or the lucky continent. So that one was fairly obvious. The only negative is, of course, just it is the time difference is about 8 hours, sometimes 9. So it makes it a bit more difficult. New Zealand was just as a result of Australia. We wouldn't have selected New Zealand if it wasn't for Australia. Originally, we thought we could just attach it to our Australian business, but when we did our homework, we realized it should stand on its own feet, and we should get our own license on that side. And our worry was the size of the place. It's small. It's 5.5 million people, and was it? If you only focus on the professional market segment, was it big enough? But we did our homework and we convinced ourselves of that. So that's why it's there. In terms of further expansion, look, we've got a couple of irons in the fire, and I've spoken about the big bets. So I think we maxed out at this stage, and so on. But maybe in future, I can probably see a picture where one day we might have something in Ireland or Canada or so. But back to this big project that we are now busy with, that might be an opportunity to also go into other parts of the world. If we take Vitality again as an example, they are in other countries, and we can do the same. So that will probably, I would not be surprised if we get this one right, that we can be in many, many countries in 20 years' time, but not necessarily having insurance licenses there.
Yeah. And on that note, what benefit does that hold to the South African PPS member? And I want to touch about something unique about PPS. And please correct me if I'm wrong, but word is that PPS is 100% obviously owned by their members. We've spoken about that. Whereas in the world, you don't see 100% mutuality. You see a partial mutuality. So these business units, PPS Australia, PPS New Zealand, to a certain extent GLU, is there an ownership portion that vests with PPS South Africa, or how does that work? How's that structured?
Very good question. What's in it for our SA members? So if I take Australia, for example, there's 3 big benefits for our members. First of all, I mentioned these services. It's a bit of a cost arbitrage thing. Many businesses in the world outsource certain deep back office functions to other places where labor is less expensive and property and so on. So our Australian business just outsourced that to Johannesburg. It makes perfect sense from a cost perspective. And our members here earn a fee, and we make a profit on that. That's the first one. The second one, we finance those businesses with loan capital. So all the costs to set up those businesses, from regulatory capital to working capital until those businesses break even, that we fund with loans, and we earn a good interest rate for our members on that. But the third, and this is the big one, this is over time, this is going to be great for our members, is there's also, call it an IP income or a royalty income, a percentage of the top line of those businesses that come back to our members. And in years to come, as those businesses grow, that will have an enormous impact on our local members' profit share.
Might be a bit of an infamous question, but is there flaws to mutuality? Do you find that there's any flaws to mutuality that might cost a mutual in the future?
I struggle to think of any. I can give you the one that are provided by textbooks. They'll tell you that you struggle to raise capital. But having listened to the initiatives that are on the go for PPS as a group, we've been able to do what we would love to do in whichever part of the world we want to do it at. So I don't see that limitation around it. There is nothing in my head that can defeat having a purposeful organization where the members really relate to that concept of mutuality, because inherently all of us want to be part of something that is one we belong to, that is greater, that we derive benefit out of, and we want to leave things better than how we found them. I mean, just speaking about those royalties that you're going to be getting from those businesses from Australia and New Zealand, Itzhak would not experience it. I wouldn't experience it, but it will be experienced by your 4-year-old Stefan and your kids, Werner. It's that intergenerational fairness and legacy that you won't find in any of our competitors. They are shareholder owned.
Okay. Exactly. I think also to what you said in terms of that risk, do you see that happen in the infant stage of a of a mutual. Whereas obviously PPS has been around for close to 100 years, 84 years, started in the midst of World War. And I believe 70 billion strong, 74, 75 billion strong asset from an asset perspective. I can't remember that exact figure, but I think it was 74, 75 billion strong. It's somewhere around there. So that sort of liquidity and that sort of buffer that you guys have put you in a position where I don't want to say there's no risk, but you're at ease and you can start initiatives and you can look at alternatives to try and further bolster that pot.
Yes.
Okay.
I want to talk a little bit about profit share. We've seen that PPS paid out a record profit share after all these years of 5.59 billion, if I'm not mistaken. Isak, you mentioned some of the challenges and some of the costs involved nowadays in terms of infrastructure, especially IT, with the development of AI and how you need to adapt and how you need to still make the ease of business to the member easy. What were the key drivers, would you say, to, despite all of these increased costs that haven't been around a number of years ago, to actually reach this record payout?
Yeah, look, you're quite right, Werner, the number, call it 5.6 billion across South Africa and Namibia. Look, a big part of that is the balance sheet returns. Markets did well last year. And it's not always, you guys will know, you manage your clients' expectations. I can imagine, when things are going really well, you keep them a bit grounded and say it's not always going to go so well. And when times are tough, you keep them focused on the long-term agenda. So we now had 2 good years of investment markets. And we just also try to manage expectations. The investment part of the profit share, that's always a little bit more volatile. But coming back to the strategic investments that we make, we also then try to differentiate a bit away from the equity markets, the stock markets. It provides valuable diversification for the future. But a big part of that profits were those. But then on the operating side, 1.8 billion was the number, also the highest. And that really is underwriting and contributions from all these royalties from overseas and subsidiaries and so on. That is part of that number, and that will grow. Our total top line is about 7 billion. That is most of that is our premium income in the life business, and then but on the short-term business and so on. Our expenses is that I always like to tell members the only leakage from the spot, because the rest is everything will be returned either as a claim or as a profit share, is the expenses of doing business. Now our expenses is about 1.3 billion, and it's one of the metrics that the board hold management on our toes, because that's the only money out, and most of that is salaries and IT and a bit of office rentals and things like that. But yes, when it comes to budget time, we don't want our expenses to grow much. We want it to grow less than what our premium growth will be. And we need to manage those very carefully.
Right. And then specifically on profit share, we've seen in that something that we advocate quite a lot for clients is the fact that in some instances, depending on the products that you hold with PPS, you get to a point where your actual profit share contribution exceeds in terms of the premiums that you pay towards the product. And why I want to highlight this is PPS launched a cross-holdings benefit a number of years ago. Mzwa, if you don't mind, to just explain to the audience what that cross-holdings mean and why would it be beneficial for a PPS member to engage in the cross-holdings, and specifically maybe to add on to that, some people or members that hold a PPS product, which is not necessarily a life risk product, how could that enhance them to introduce a life risk product?
Okay. So cross-holding booster, quite one of the innovations that was introduced 4 or 5 years ago by the PPS group. So the way it works is that if you've got a risk qualifying product, you get your profit share. And then if you get a second one, like the short term, you get your profit share. Investment, you get the profit share in that company. ProfMed, administration, you get your profit share. But then what they then do at the end of that process, they look to saying, what's your product holding? I'll speak for myself. Around it, I got an extra 30% because I have all 4 products, of which the first 2 were sold to me by Stefan here, sitting right there, because he was the one that introduced me to PPS more importantly, before I joined PPS, because I already believed in the value proposition of the group sitting right there. So really that is what it does. And then what it does is for people who have a product that doesn't have a qualifying risk one, there will be an opportunity that this year we will be rolling out a product that will enable them to qualify for profit share.
Wow.
Isak, I want to talk a little bit about PPS investments. And I've read in the financials as well, something that really stood out to me that was really interesting is the fact that PPS investment also had a remarkable year last year. I think they had about 10 billion rand in gross flows. And one thing that was highlighted in the financials that I was surprised, let me rather say, it didn't come as a surprise, but it was nice to see it compared to how the market reacted earlier last year with the two-pot system. And not a lot of PPS members actually elected to make use of the two-pot system. Why would you say was that?
Very few. And I think it's perhaps it's just that our market segment is not so much in dire need of money to use immediately. In fact, for us, the two-pot system was a bit of a non-event in terms of paying out to members. I don't even think it was more than 1 million that left us.
Amazing.
Yeah, so the reason why, so you mentioned the gross flows, Werner, just shy of 10 billion. It's a huge number. Net flows 3.5 last year. And we're also very proud about that number because a lot of the bigger asset managers, and that's maybe the curse of when you become big, because then a lot of your clients start living off their money, they need it and so on. A lot of the bigger asset managers, actually, their net flows were negative last year. But we're still more a younger business. Our clients typically younger. They still need to save for retirement. So still in a strong net flow position. So yes, we hope we can keep it like that and continue growing.
Looking at some of the other affiliates, we're talking about PPS investments, PPS professional health indemnity, PPS short term. Compared to some of the competitors, I know some of these businesses are big businesses. Compared to PPS, some of them are still fairly new in the market, and this might obviously be a bit of a tough question to project, but do you guys foresee that some of these affiliate companies, your short terms, your health insurance, health indemnity, your PPS investments, that will further, we spoke about the cross-holdings booster, but from a profit sharing actually in the profit of that entity itself, will that also be a big part of a profit share allocation moving forward?
Yeah, no, for sure. Our so talking about the subsidiaries, the healthcare administration business has now been around for 20 plus years, well established. As Zordelia have said, members who are also Profmed members, they get an extra slice of profit share. We distribute the admin profits and Profmed to them. So well established and so on. Our investment business now well established, started in 2007. It's now probably a medium-sized asset manager in South Africa. The other businesses are younger. So our short-term, the businesses that we write on our short-term license, so the healthcare, professional indemnity, and the, shall we call it just the normal short-term, that kind of insurance that all of us need, car insurance, household insurance, and so on. That business last year in total made a 30 million profit. So it's now broken through. It's now reached scale where one must be a bit careful. Short-term businesses are volatile. It's very weather dependent. Last year was a good weather year, not many flooding and hailstorms and so on. But also you have reinsurance programs also to protect yourself a little bit against that. But on a sort of a normal claims ratio, if I can call it that, in other words, weather events not too extreme and so on, those businesses are going to grow. It's projected to contribute meaningful to profits in future. So our members who are members of the short-term insurance, who make use of our short-term solutions, they already get a slice of profit share from that business. But that's likely to grow significantly in future.
Gentlemen, I've got two last questions for you, and I think I want to start with you, Isak. Just in terms of AI. AI is overturning the way we do business. We just had a conversation on our way here, coming from another conference where they spoke about AI, and you can upload documents, you can do FNAs, ROAs, it's compliant, it's actually something where you can, by the click of a button, make recommendations, life insurance. How will that impact insurance companies over the next 10, 15, 20 years, if we just look at since ChatGPT entered the market, how it's completely changed the technology sphere. How will PPS adapt to that? And then I've got a question for you, Mzwa, and purely just because I pitched to you initially when I did PPS. So how will you pitch PPS to a young 22, 23, 24-year-old that's just finished his professional degree? So maybe starting with you, Isak, just in terms of AI, how are you pivoting? How are you positioning yourselves? How are you making use of AI?
Yeah, AI, and to be honest with you, Stefan, it's a very tough question because I think the easiest answer is we actually don't know yet. It's developing so extremely quickly. I think the way in which AI is going to change our jobs and make it easier and all those things, we probably look back in 3, 4, 5 years' time and say, wow, we didn't even saw that one coming, where we sit today. The good thing is it will, I think it's going to create a lot of efficiencies. There's a lot of schlep work that humans still do that in future we don't have to do. I think even in your space, Stefan Werner, probably going to assist you a lot and open up time and capacity to focus at other things and perhaps at a higher level, you're not so into the day-to-day admin part of it. So it will certainly lead to efficiency. In fact, at our group exco, a recent one, last week, we already challenged ourselves to say all the areas must come back. We're actually going to train up our senior managers a big part on AI. Myself, I'm a bit of a laggard, a late adapter, so I need those training and just to open our eyes and our lenses and so on. We want all of us to come back in about 3 months' time and say, right, in our environment, this is what we think can change and so on. So will it have enormous impact on us for sure? But I think we are so in the early stages of this coming wave. It's difficult to predict. There is a dark side also to it. Obviously, a lot of people are worried about job losses and things like that. AI can go wrong in the world. Bad actors can capitalize on it and so on. And I think a lot of the people at the forefront of AI is a bit, say, there's a portion of it that actually needs to be contained. If this one goes wrong, don't even want to think of the consequences.
No.
But there's a lot of good stuff that it will bring.
100%. So, and if I'm 23, 24 and I'm considering PPS, some of the competitors, some of the other companies in the market, why PPS?
Other than the obvious benefits of mutuality, which we've spoken about at length, and what we do know with 23, 24-year-old is how much purpose resonates with them around leaving things better than how they found it. So PPS, tick. Mutuality, member, I own a part of PPS, tick. And then there's that part where PPS, Isak spoke about a very ambitious project where we're going to be working on with Accenture. A huge part of it is directed at those youths, 23-year-old, about doing life with them and walking the journey just beyond product and beyond cover. It's how do you holistically walk with that 23-year-old from where they are currently sitting. You would have experienced it now. It's just only a small portion of it that you've seen that we're building with the Wealth Mentor, which will be incorporated into the project that we spoke about in the new year. What it really does is that it speaks to them in a language that they understand, whether they're a student. I'm speaking from experience. I've gone with JC to the universities where we've showcased what the Wealth Mentor is for the students and its capabilities and insights it gives them about their future professions and where they are taking their career. And there's been a very positive uptake by the 23, 24-year-old who are about to graduate.
Wow. Thanks for that powerful answer. And if you've got any last question?
Gentlemen, I want to congratulate both of you because one thing that I've also seen in the financials is that you've got a very strong employee satisfaction score. And that's something that speaks volumes for the people working at PPS, working in a company where they feel valued, feel heard, and they're driving that culture. As two young professionals building a business of our own, what advice could you give us to build a similar employee satisfaction within our organization?
There's so many.
Yeah, I'll start with that, but probably the one that I'm probably most passionate about, because it's a measure that we take quite seriously in advice and distribution, and we hold ourselves accountable for, but we are deliberate about it. It's not something that just mechanically happens on its own. I'll just speak about one and so I can spare out the rest, but one of the powers that creates a highly engaged employee force is if people feel that they are co-creating the solutions, they are co-creating the culture of the business that they want. So at A&D Advice and Distribution, we've got a charter that we use, which are the behaviors to saying if you are part of advice and distribution, these are the desired behaviors of how we work with each other, how we talk with each other, how we do business. But it's not a top-down approach, it's a bottom-up approach that we then crystallize and package it into that. So if you guys get that right, where they genuinely see their input into their charter, into the culture that you're creating, it will really create a very engaged employee force out of that.
Yeah, thank you.
I think there's power in that, in forming up almost like a brotherhood, family environment.
Yeah, I would concur. I think that's that sense of ownership. If they feel it's their business, if I reflect back on my Citadel days, Citadel was also at one stage where you guys were very, very big ambition and so on and grew. I think if everybody feels it's, that sense of ownership, I'm busy helping to create this, it can be enormously powerful. And maybe just a second one is just from a leadership perspective, that servant leadership, to serve, and we try to live it from a Group Exco everywhere. We are there to serve. The most important people in the business is those touching your clients and your advisors, and how can you make them shine? We are just there to make it happen, to help them. Yeah. So
Amazing.
Gentlemen, thank you so much. If you are watching this for the very first time, we are Money and Medicine. We are here to empower, educate, edify the medical doctor. If you haven't yet, subscribe to our channel, hit that like button, go check us out on social media, Instagram, Facebook, LinkedIn, X. Get the content, get the information, make better decisions, and until next time, plan the plan.